If you're looking to get into cryptocurrency trading or investing, I have 9 concrete tips in this video that can help you get up to speed. I'll list them as timestamps in the video description so you can get to each one very quickly. Other helpful videos, resources, information, all of that will be in the description as well, so definitely check it out down there. The first tip is to download a professional crypto trading platform. Now, Coinbase just isn't going to cut it if you want to really step up your game. Platforms that I use and would recommend are Binance, FTX, and Bybit. Bybit has both spot and futures trading markets. They also have a deposit bonus. I'll leave that linked in the description. FTX have both futures and spot markets. They have good support, not amazing support, but good support for cryptos. You can get 5% off your trading fees. I'll leave that link in the description. And then Binance offers some sign up and deposit bonuses as well. You know, Binance, the biggest exchange. All 3 of these have extremely low fees and good crypto support. So you need a pro crypto trading platform. I'll leave those links in the description if you want to go ahead and sign up. The next very important thing to understand if you're a beginner is what a stablecoin is and why it's so important in the crypto ecosystem. It's actually more important really than Bitcoin, because without a stablecoin, we can't really do anything else. If you want to buy a crypto like Bitcoin or Ethereum, you have to obviously spend money to do that. And the way you do that in crypto is using a stablecoin. A stablecoin is essentially a crypto version of a dollar. You take a dollar and you move it into a crypto version of that. Some popular stablecoins are USDT and USDC. They're just different, and you can see Tether is number 3 and USD coin is number 5. So when you want to go ahead and buy Bitcoin, obviously on some platforms, you can go ahead and deposit US dollars or pounds, and you can do that directly. But if you're trading smaller cryptocurrencies, as you can see here, or if you want to, start trading really professionally in a lot of different ways, then a stablecoin is going to be something that you want to get. And you can see the price right here is pretty much $1 for most of these. So when you want to trade against something, you'll be looking at a US dollar Tether or a USDC pair. The next tip is to use limit orders, and this is something you don't get on the consumer-friendly Coinbase app, and it can save you a bunch of money, so really important to use. Again, if you need to know how to use Binance, FTX, Bybit, or other platforms, I'll leave those step-by-step guides in the description. But what I'm going to do is go over to Bitcoin right here and press trade, and I'm going to come down, so you can just see this right here. I'm going to come down to US dollar Tether right here. So I'm trading USDT, which is basically US dollars, against Bitcoin. Now, this comes through to the advanced trading screen. This is actually the classic screen. As you can see, I'm going to go through to advanced. It's all the same information. It's just a different layout. I prefer this layout. Now, what you can see on the right-hand side when you want to buy Bitcoin is that you have the option to put in a limit order. A limit order is when you tell the system the exact price that you want to trade at, and if the price doesn't match your trade, then it won't go through. So this is different to a market order, because let's say the price right now is 44,114, but I want to trade at, let's say, 44,112. So obviously my bid, you can see right here, is underneath the current price. Now, why this is important is because the price moves around all the time, and obviously 126, as you can see, is a lot more than 112. So I'm going to bet that the price will jump around and meet my limit order at some point. Now, what happens when you press buy BTC right here, you have to put an amount that you want to buy. You press buy BTC, is that your order will come down on the left-hand side and it will be waiting to execute. So you don't actually trade straight away, but as you can see right now, the price has fallen to 110. So I would have bought at, 44,112 instead of 44,126 or whatever it was. So I definitely got a better deal by putting in a limit order right here. And you saw that basically live. So limit orders can definitely help you out. You can spend less money and get a better trade when you put in limit orders rather than just trading at market, which is what you do when you use the Coinbase consumer app. Now I'm going to very quickly go over how to get set up with charts and how to very quickly understand them. Now, this is a huge topic, but I'm going to explain the very basics of it here. Now, what we can see is this is a candlestick chart that you will see on professional trading software. The way that you get to this is go to candles right here. So you can click this down and you have some options. Line charts are useless. Don't use them. Go for candlesticks. Then what we want to do is change the time period that those candlesticks have. Each candle, as you can see here, is 1 day. That's what I will use for this example. And there are different reasons why you would use different length candlesticks. Really important with a candlestick though is what the information that they give you, right? So with a candlestick, you have this line right here, which would be an opening price, and then you have a closing price right here. So the opening and the closing price. This gives me two bits of information. It gives me the opening price of that time period, so the start of a day, and then the closing price of that time period, the end of the day. When the time period closes, then obviously you close the candle, and this is a green candle because the closing price was above the opening price, and so that's obviously a green day to the upside. You also get two more bits of information. You get what are known as wicks. Wicks tell you where the price of that asset traded within that day. So this actually went down to 39.5 and it went up to 42. That gives me 4 pieces of information versus a line chart, which gives you basically just a closing price, which is completely pointless. So use candlesticks. The next thing to do is to try and find areas where the price gets sticky at. This is known as support and resistance. Support to the downside, resistance to the upside. This is a very complex thing to get into, but very simply you can see I've drawn some lines here. You can see the price came down to this level and then bounced off. That is a support area, so I drew a line. You can also see up here near the the present, we have the price moving up to this price right here. So that's once, twice, 3 times, 4 times, and now a 5th time. This is a resistance level because the price got rejected off this line all of these times. That is a resistance level. It's really important to get these areas on the chart because once you know where the price may kind of get sticky around, then you can obviously try and get some strategies in place if you want to go long or go short. Where do you want to go long or short at, and where do you expect the price to go after? And that's really important for trading strategies. I just condensed about 7 hours of material down into about 3 minutes. So obviously that's not going to explain it well enough for you. I've got some other helpful guides on technical analysis and trading. I'll leave them linked in the description. But if you want to get kind of more professional, I'm just going to plug my course right here because I have, I think, about 50 videos on trading, getting set up with charts, how to read them, how to go ahead and get some day trading strategies or some longer term investment strategies right here. You can see the crypto course. I'll leave this linked in the description. But down here we have an entire trading section, right? So the basics all the way up to some more advanced trading strategies that I would use in my previous life as a broker. So obviously if you want some more professional tips and education right here, obviously that's all in the course. We have private Discord groups as well where you can come and ask me some questions as well. So I'll leave that linked in the description if you want to check it out. The next thing to decide though is whether you want to trade in the spot market or the futures market. There are pros and cons to both, and there are different risks of doing both as well. I'm going to quickly show you the spot market right here. This is the spot market. Now a spot market means basically you use money to buy something. So very simply you take dollars, right, and then you put that into a stable coin like USDT, and then you go ahead and buy a cryptocurrency like Bitcoin. You buy and own that cryptocurrency. You can withdraw it into a separate wallet, and that is yours. Now, what's different is the futures market. Futures are very different in that you don't actually trade the underlying asset. So with futures, you take $100, and then what you do, you can turn that into USDT. And then what you do is basically fund your account with this collateral that you have. Now, what you can do is basically bet on the price of Bitcoin going up or down. This is very different. And then what happens is that your P&L, your profit and loss, basically goes into your account, whatever that may be. Now, there's some differences here. With the spot market, you obviously buy and then hold the crypto and then hopefully sell the crypto at a later date for a profit. That's great. With futures, because the future that you're buying is basically synthetic, it's like a synthetic, and all you do is just bet on the price movement. So you can actually bet on the price going up, but you can also bet on the price going down, and you don't need any crypto in your account. Futures also allow you to leverage. So let's say you put $100 into your account, you can use 5x leverage right here, and then you can trade trades that are worth around 500. Now, obviously a smaller percentage move of 500 is gonna make your profit and loss much bigger than if you were trading only with your cash. Futures are way more risky. Because you use leverage, you're taking way more risk, because a smaller percentage move in the price is actually a much bigger move in comparison to your initial capital. Futures have the advantage though of being able to go short, which is betting on the price going down. Futures are definitely for more advanced users. If you are a beginner, I would stick to the spot market because you can only lose what you invested. With futures, you can lose a lot very quickly. You can also gain a lot very quickly. So there are pros and cons of both, but obviously more advanced traders do tend to go towards futures for short-term trading because of those advantages. But for most people, trading in the spot market is just going to be a lot easier, especially for beginners. Next up, if you're day trading or trading over the short term, have a specific strategy of where you want to get in at and where you want to get out at. You can have a strategy called a TPSL, or a take profit and stop loss. That's very simply just going to be a price level where you're happy and that you know what your risk is. So let's say you're trading Bitcoin at 40,000 and this is where you buy. Well, you can say, based on my analysis, I want to take profits up here. And if the trade moves against me and I'm incorrect, I want to cut my losses down here. So this could be 42K and this could be 39K. All right, so you need that specifically when you're trading short term as a strategy. The way that you can do this, I'm using Bybit right here, is that you can actually put this in when you're trading futures. You can see buy long with TPSL or sell short with TPSL. So I'm going to click buy long right here. You can see I can put the order price in. So I'm going to click this. That's my order price. That's my limit price. That's the price I want to get in at. And that is 44,142. I'm then going to put my take profit at, let's say, 47 and my stop loss at, let's say, 42. Whatever it may be, there are different strategies right here, but you can see that if the price falls below its current price all the way to 42, I will sell at a loss. That is to stop any further losses occurring if the trade moves against me. Obviously, you can take your profit at 47, and actually these levels are usually dictated by the strategies that you obviously look at on the chart and the price levels that you're comfortable with. But when you're day trading or trading futures, TPSL is definitely recommended. I go over it in more detail in other videos that I'll link in the description, or the crypto course, because obviously it gets quite complicated with the types of strategies that you can use. But yeah, if you're trading short term, definitely having some parameters in here is for the best. Next tip is to understand what type of trader you are and choose your crypto coin accordingly. If you just want to day trade and trade the wider market, then most people will just concentrate on Bitcoin or Ethereum. Bitcoin is a much larger asset than everything else, and so it really trades on macroeconomic factors. Now, most people day trade with Bitcoin because the market is much more liquid, and most of the information about Bitcoin, in fact, all of it, is pretty much publicly known. And that means that Bitcoin is a good barometer of how the market is feeling. If we go all the way down to number 100 down here, a lot of information about these coins is extremely difficult to understand or get hold of. There's not a lot of news sources for them. A lot of the information is maybe, something that the protocol team may know, but the public doesn't know. And so that becomes extremely more difficult to trade because you're just unaware of a lot of things about these smaller tokens. Now, obviously, if you're looking to maybe, get into some smaller coins and really become an expert in some certain coins, then you may have an advantage over the rest of the market. But smaller coins, of course, just have fewer people trading them. And so they might not reflect some of the news that comes out about them because they might not have narratives that go along and get out into the public field where a lot of people are trading them. So what I would say is, if you're looking to day trade, most people concentrate on the biggest assets because they're liquid and they can move around with a lot of liquidity. So just choose which type of trader that you want to be. If a day trader, most people choose Bitcoin and Ethereum, or you can come down to some smaller coins and potentially pick them up over the longer term because you think of, some of the things that are going on with them are actually going to make the market re-rate them and change the price over time. Next is to focus on some specific narratives for each coin and understand the market. Twitter is a great place for this. Follow people in the know, follow people that are active in the industry, because getting information from them can help you with your trades. I'm going to explain what I mean by this right now. So obviously, as of making this video, a big narrative going on is that one of these projects, namely Terra, is basically going out and buying a few $1 billion worth of Bitcoin. This is really important because they basically signposted this to the market on Twitter and in other news sources saying, hey, we've got a few $1 billion worth of Bitcoin to go ahead and buy over the next few weeks. Now, what happens when there's a big buyer in the market for something? Well, usually the price is going to go up, right? And what we can see, this is the Bitcoin chart, is that over the last few days, guess what? The price of Bitcoin has come from a kind of support level here, and day by day, it's just ticked up a little bit. So you have to keep up with news and events in the industry, not just looking at support and resistance levels, looking at the chart and saying, well, I think it might go up here, or I think it might go down here. You're pretty much guessing at that point. But if you understand that there are narratives that go around, then you can obviously use those to trade and get a better probability of the outcome that you want. So that would be Bitcoin. The next one is Ethereum. Ethereum, as of making this video, is going through what they call the merge. It's a big update to its project, one of the biggest in its history. So there's going to be a lot of hype, a lot of news stories, a lot of people trading it and buying in. And that means there's liquidity and price movements. So if you understand some of these projects, you can go down to Cardano, Solana, Polkadot. Is there anything happening in that ecosystem? Are they launching new products? Are they launching new advancements to their chain? That is obviously going to come out in the news and be a narrative that people can trade off. If you know what's happening and in your mind you can set specific dates where it's going to happen, you can then use those as trading events. This is the Ethereum. I'm going to go to Ethereum chart right here. So just switch over to ETH. And the merge is really happening over a period of the next few months as of making this video. Now you can see Ethereum charts Bitcoin quite well, right? So they're correlated. But over the next few months, you're going to see a ton more hype come into Ethereum as it moves through and updates and advances its blockchain. And this means there could be a lot of trading opportunity moving into that event. Now you can swing trade this and say, I'm just going to kind of buy this for the next 3-4 months and ride a move up potentially. So there are different events that happen in the industry, but if you're just going off charts, you've got no chance whatsoever. You need to at least know 1 or 2 projects intimately, and they're the ones that you can trade and gain some advantage on. The next tip is a very macro tip as well, which is understanding how the market is moving. And this can dictate whether you have a bias towards going long, betting on prices going up, or betting short, prices on going down. So the way I look at this is really from a top-down approach. So the first thing is central bank monetary policy. This sounds crazy, but this is going to affect asset prices the most. Is the central bank, the Fed in the States, or the Bank of England in the UK, or the ECB, are they becoming looser with their monetary policy, or are they tightening? When they're loose, asset prices go up. When they tighten, asset prices go down in general. We're talking about crypto and stocks here. So you have to know what part of the economic cycle we're in and if they're easing or tightening. Next, economic events. What is happening in the world today that is affecting prices, and how will prices move in the future moving out of that? These are going to reflect how you place your bets in the market. Then we're getting down into more specific areas like crypto market news. What's happening in Bitcoin? Is someone adopting Bitcoin? Is a country adopting Bitcoin? Is a company adopting Bitcoin payments? What is happening to Ethereum and how is it advancing its blockchain? Is there a specific news event for some other crypto project? This is going to be affecting how crypto moves in general. If Bitcoin is up on the day, you can bet pretty much every other project, as long as there's no bad news, is also going to follow suit for the most part. And then you get into specific news about each individual altcoin. Smaller coins have specific news that can really make them blow up. you know, in a very short period of time. You know, are they advancing the blockchain? Have they done something new? That is obviously going to affect smaller coins more, you know, short term as well. So you have to understand all of that and have a kind of running balance of where this all sits. And then you can use that to obviously make your decisions. Very, very complex. And of course, I go over this in way more detail in the crypto course, or, you know, come and join the public groups as well. I'll leave those linked in the description. But it's difficult, but obviously this is going to help you get an edge when you're trading. If you want to get those deposit bonuses on the platforms I mentioned, I'll leave them linked in the description. The crypto course is linked down there as well if you want to take everything to the next level. I'm James, this is Money ZG. Cheers for watching, and I'll see you in the next one.